How is your FICO score determined? There are 5 factors that determine your FICO score. Your first and probably your first and the highest percentage, which represents 35% of your FICO score, that score from 300 to 850, is your payment history. How long have you paid on your credit report on your accounts? Do you have any late payments? Obviously, you don't want any late payments. You want to make your payments as long as you can, and you want your history to be 100% of payments that you make. That'll get you 35% of your score, and it'll get you the highest percentage in with regards to that. The second option represents 30%, and that's the amount owed on your cards, right? So whether it's an installment loan, if you have a car loan and you just got it and you have $35,000 car loan and you've only made 2 payments on there showing that you know, obviously, depending on how much your payments are, let's say you owe $34,000. That represents part of the amount owed. And then more importantly, on your revolving accounts, which are credit card accounts, how much utilization you're using on those cards. So if you have a $1,000 balance, some people say don't spend over 30%. So that's $300 of that. Try not to go over that amount. Me personally, with my credit cards, I keep them at a 0 balance. I found that my FICO score goes up higher when I don't have a balance on any of my cards, but nevertheless, your actual amount owed on your credit represents 30%, right? The third thing on your credit is your credit history. That represents 15%. That represents what's actually on your credit, how long it's been on your credit, and so forth. That represents 15% of your credit. 10% comes down to your new credit. What are you applying for? What type of credit that you have with regards to what's on your credit report. And then lastly is your credit mix. 10% represents your credit mix as well. That total number represents 100% of what it is that you have. And credit mix basically is what type of accounts do you have. They want to see you have installment accounts. They want to see that you have revolving accounts. They want to see you have a mortgage. They want to see you paying car payments and all of those types of things on your credit report. And so they like to see a credit mix that represents 10% of your FICO score, and you know that'll help you out as well.